Okay, so good morning. Okay, so today, again, you are welcome to Network. And we started with our tests. So, and I can't mark everybody's own, but the question was that you should state the standard setting process, right? That was actually a past question. That was a past question. And the only person I checked was yours. And you did not get it. So if you remember, if you look at your notes, there are 4 steps when it comes to standard setting. The step one is agenda consultation. And if you remember, at this step, what we do is we set agenda, we try to identify accounting issues, and we put everything together in a work plan, right? And the way we set that agenda or set up that work plan is through consultation. That's why they call it agenda consultation. Now, whom do we consult with? We consult with the IFRS Interpretation Committee and as well as IFRS Advisory Council. If you remember, the IFRS Interpretation Committee is the body that usually sets interpretations where there are no relevant standard on an accounting issue. Then they will set up an interpretation pending when there will be an accounting standard. No, it's working. No, it's okay. It's okay. Okay. Beyond that is that we also mentioned IFRS Advisory Council, and I told you that the IFRS Advisory Council are the people that usually get information from the public. Whenever the board needs information from the public, they get it from the IFRS Advisory Council. So in step one, which is agenda consultation, they set up an agenda through consulting with the IFRS Interpretation Committee as well as the IFRS Advisory Council. And the step two is where they enter into a research program. And this research program is for them to identify whether the accounting issue or their work plan is worthwhile. Should they carry out a standard setting project on this accounting issue? And the way they do that is that they codify this into a discussion paper. And this discussion paper is just stating the accounting issues they want to solve. And this discussion paper, they will send it to the IFRS Advisory Council, who will send it to the public to gather public comments and opinions. So when they get the comments and opinions from the public, they will send it back to the IASB. Then they will look at it at, okay, this is okay, let's carry out an accounting project or accounting standard project on this accounting problem. And that they can only make that decision from the comments and opinions they have gotten from where? From the discussion paper. That's step two. The step three is where they now do the standard setting program. And the standard setting program is where they will now develop a proposal on, okay, yes, this accounting issue that we have, what are the relevant accounting treatments that we can accord to them? So that's when they will come up with different and alternating accounting treatments. And this proposal, they will codify it, put it together in an exposure draft. And this exposure draft, it goes to the IFRS Advisory Council, who sends it out to the public for public comments and opinions. So people will bring in their inputs, talk about it, they will send it back to the board. The board will look at it, their comments, their opinions. Maybe on that basis, they would shrink it, they will send it back. It takes a lot of time. Eventually, they will come to a conclusion that the exposure draft now becomes an accounting standard, which is IFRS. And when we have an IFRS, it doesn't just stop there. They didn't just leave an IFRS outside. That's why we went to step 4, which is the maintenance program. And that's where they follow up with the applicability of that standard. How easy it is to apply by members of the public or professionals in practice. So if there is, so at the step 4, That's where they do what we call post-implementation review. And it is at that stage, if there were any challenge in application, that is when the IFRS Interpretation Committee will come up with an interpretation on, okay, if there is this differing opinions among professionals or there is challenge in applying it, then they will come up with an interpretation and say this is how we should what? Apply it. Okay, so for your exam, that question I asked you, it came out before for 6 marks, and your ability to mention step one, which is agenda consultation, and tell them that what they do at this stage is work plan. And they develop this work plan through consultation with the IFRS Interpretation Committee and IFRS Advisory Council. That's it. You don't have to write a long story. Step two, research program. What they do at that stage is codify a discussion paper and send it out to the public. Step three is where they do exposure drafts as well as the accounting standard. And step four is the maintenance program where they do post-implementation review. And that's it. That will end in your 6 marks. Okay, so that's that. Now, last week, we started with regulatory framework. That's what we did last week. And I told you is a 5% part of your syllabus. And what we tried to achieve last week is to explain to you regulation that governs reporting. And I told you that we would look at this regulatory framework from two angles. So we looked at it from the rules and principles, and we also look at it from the regulatory bodies that develop those rules and principles. Now, the rules and principles together, we called it GAP. And we looked at the sources of GAP, from National Accounting Standard to National Company Law to local stock exchange listing requirements. We looked at all of that, and we tried to explain rules and principles. Eventually, we agreed that IFRS is what? Is principle-based. Abi? That was what we agreed last week. Then we went ahead to the regulatory bodies, and we mentioned that the regulatory body in charge of IFRS in Nigeria is whom? The Financial Reporting Council of Nigeria. And I mentioned that Financial Reporting Council of Nigeria, I told you that they have one key objective. And I said somebody was going to tell me in this class. Who was the person? You. So what's the key objective of the Financial Reporting Council of Nigeria? Thank you very much. Can you clap for him, please? That's correct. Thank you for remembering. So we said is to protect the interest of investors and other stakeholders. That's their key objective, and we explained why. And from that key objective, we went on to the second objective. And I said somebody was going to tell me that second one. I didn't mention that. Okay, so we said it's going to provide guidance on issues relating to corporate governance and financial reporting. It's part of their objective. We said they would also ensure that good corporate governance practices are adopted by entities, and also they will ensure the accuracy and reliability of financial report. Those four are sequential. You can easily remember it in the exam, right? You can easily remember it in the exam. So it's okay. And I also gave you other three to make it 7 objective I gave you in class that day. I told you about harmonization and convergence of regulatory bodies and professional bodies. I told you about ensuring high quality of service among professionals. I told you about eventually to ensure improve the credibility of the financial report. And we had a secret last week. I won't say it here, but we went on to the structure that actually develops IFRS, right? And that was the IFRS foundation structure that starts from the monitoring board to the trustees of the IFRS foundation, then who eventually appoint the ISB as well as the ISSB. Eventually, the ISB will appoint the IFRS Interpretation Committee, and we explained all of this in detail last week. And of course, we ended with the standard setting process, which was your test for today, Some of you might have gotten it right, some of you might have gotten it wrong, but it's okay. And I gave you an assignment last week, which was the need for regulation. And I expected that you should send it to me. Some of you sent it to me. Surprisingly, I, people that sent it to me, they had very good points. And I want to tell you to keep it up. I'll give you another assignment today, but your assignment was spot on. Those of you that did not send it to me, you need to do better and ensure that you're supposed to send it to me. You know that I cannot start marking everything in class. We don't have that time. So when you send it to me, I will read it, then I'll make comments about your assignment. So next time, send it to me. And if you have not done it, please go and do it. Because when you do it and they bring it in exam, you won't forget. You would definitely remember it. And when it comes to regulation, I saw some of you, you were talking about regulation ensures that investors are protected, their interest is protected. Yes, some of you mentioned that regulation ensures that there is comparability and consistency in preparation of financial reports. Yes, some of you even mentioned that with regulation, preparers would present relevant and reliable financial reports to to investors. Yes, some of you even mentioned that with regulation, we would ensure that we'll be able to enforce compliance on entities, that they should comply with IFRS. A lot of you mentioned good points. So go and, it's in your notes actually, it's in your handout. You can look at it and get more points from research. But at least for the need for regulation, you should be able to know minimum of 4 points in case they ask it in the exam again. Okay, so that was what we did last week. Now, today, we would go on to another 5% of your syllabus so that we know after today we are done with 10%. So now, and that's conceptual framework. Now, I think the first thing we need to identify and understand very fast is what is this conceptual framework. We need to understand it very well. What is a conceptual framework? And before I go there, let me give you a background that leads to this. You see, what leads to this conceptual framework is that, remember last week, we agreed that the regulation, the rules and principles that governs reporting is GAP, and there are three of them, but we were going to focus on accounting standard, specifically IFRS or IAS in Nigeria. And remember, we said that IFRS is a principle-based framework. And we try to explain a principle-based framework to you. And what we explain is that with a principle-based framework, it gives us a foundation for reasoning, right? It gives us a foundation and allow you to reason how to achieve that, to build up on the foundation. Alternatively, it gives you like a target or an objective. Then it allows you to use your judgment to achieve that objective. It's just like you are going to the mainland now. Principle-based approach will tell you get to the mainland. Just get to Oshodi or get to Isolo, whatever the target is. So it doesn't care whether you pass the third mainland bridge or wherever you pass. Anyway, just get to the mainland. And that's principle based. You see, when it comes to reporting, you want to apply it to reporting. What gave birth to principle based, or the enabler of principle based reporting, is this conceptual framework. So this conceptual framework is the specific objective you want to achieve. When it comes to reporting, that target, every entity must ensure they achieve. What sets that target? That target itself is the conceptual framework. So what we want to learn today is extremely important because in itself, it is the statement of generally accepted accounting principles. This conceptual framework is the gap itself, is what gave birth to gap itself, is a statement of generally accepted accounting principle. See, this thing, this conceptual framework we want to do today, in itself, is the foundation of financial reporting. Is the foundation of financial reporting because it's the one that sets the tune. Is the one that tells us what we need to achieve, is what the objective is, what we are working towards. So it is the foundation of reporting itself. Now, being the foundation of financial reporting, and you know already that when we are preparing our financial reports, what we use is the IFRS or IAS. We mentioned it last week. That is the tool that prescribes how transactions and events are treated. So if the conceptual framework is the foundation, that means it is the conceptual framework that gives birth to the IFRS or IAS. So we can conclude that this conceptual framework helps to develop new IFRS or what? IAS, or to amend and update existing IFRS or what? IAS. That is what conceptual framework is in itself. The first thing I've mentioned is this. When I started, I said conceptual framework is the enabler of principle-based reporting. And that means that it is what sets the target for preparers. It is what gives us the objective we want to achieve. So what we're going to be learning in conceptual framework today is extremely crucial. That is why almost every diet, you see them asking it in the end because it's important. So all the accounting standard relies on the conceptual framework. It is what they use in developing accounting standard itself. It's the foundation of reporting. This is where it starts from. Without this, accounting standard is just like you are just cramming it. You might not necessarily understand what we are doing. And that is what we want to look at today. So you will see that ultimately, this conceptual framework is extremely useful for the guys that develop IFRS. And internationally, who are the guys that develop IFRS? Who are the guys that develop IFRS? The IASB, right? The International Accounting Standard Board. So it helps the IASB to do this, to develop new IFRS or IAS, or to amend or update existing IFRS or IAS. It doesn't stop there. It doesn't stop there. It usually helps also so it helps preparers to develop consistent accounting policies where there are no IFRS or IAS that apply to an issue. So usually you will learn later about a standard we call IAS 8 on accounting policies. We'll teach you that. And what IAS 8 does is that it tries to tailor IFRS to an entity. So every entity that wants to prepare their financial statement must have an accounting policy. So accounting policy is just how you are applying the standard in your entity. That's accounting policy. You learn about it. But the challenge is that in developing accounting policy, we usually use IFRS or IAS. That is what is used to develop accounting policy. So the challenge is that if there are no IFRS or IAS for an issue, that means it's going to be difficult to develop accounting policy. So the conceptual framework comes in and help, since that's the foundation itself. So it helps preparers to develop consistent accounting policies where there are no IFRS or IAS that apply to an issue. So it helps them. And beyond that, it also helps. So it also helps the users to interpret and understand the financial reports. And finally, it helps other stakeholders to understand how IFRS are developed. It helps other stakeholders understand how IFRS are developed. Okay, see, what I've tried to do here is to give you an overview of the conceptual framework, majorly what it does. And the first thing here is that the most important is the statement of gap itself, and is the foundation of reporting, and it helps to develop new or amend existing IFRS. So is the objective itself, is the target, is what we are working towards, and it helps these other guys to do some other issues or to solve some other problems. If I want to give you from a practical perspective, more practical that I think you'll be able to even relate with more, is that almost all of you know a building plan or an architectural design. You know what an architectural design is. Whoever wants to build a house will start with an architectural design. So when your architect does that and gives it to you, your engineer can interpret that and do your structure, right? So the thing about this design is this: anybody, if another person uses that design to build his or her own house, you find out that my house and that other guy's house will be the same, at least from the structural perspective. So the structure is going to be the same. Though if we go inside, you can start seeing differences in terms of the painting, the furniture, the fittings, and all of that. That is, but the structure itself will be the same. And that is what this conceptual framework is similar to. It is like the blueprint when it comes to reporting. That is why when we start studying IFRS or IAS, you will see that all IFRS and IAS has a similar structure. Most of them start with definition of terms, to recognition, to measurement, to disclosure. So they have almost the same structure. But by the time you go inside, you will see that their content is not the same. It depends on the nature of the transactions that they are dealing with. Okay? So majorly that's the conceptual framework. Now, having known what the conceptual framework is, then we have established that it's the objective or the target itself. I think we need to know what is that target? What do they want us to achieve? What do we have in mind as far as reporting is concerned? And that takes us to the content. And that takes us to the content of the conceptual framework. Now, the content of the conceptual framework we're going to be looking at in this class is the 2018 conceptual framework. And that's the most recent one. And the 2018 conceptual framework has 8 chapters. And here are the 8 chapters. From chapter 1, okay, so these are the 8 chapters we'll be looking at from chapter 1 to chapter 8. So let's start with the first chapter. So let's start with the first chapter. That's chapter 1. Okay, so the first chapter is the objective of a general purpose financial report. And this makes sense for it to start as as the first chapter. Because remember, I told you that the conceptual framework is the target or the objective we want to have in mind when preparing financial reports or when setting up a standard. So saying that the first chapter should be the objective of a general purpose financial report makes so much sense because that is what they want you to have in mind when you are preparing financial reports. And what does the conceptual framework state? It says that the objective, the objective is to provide financial information about a reporting entity that is useful to potential and existing investors, lenders, and other creditors to enable them make decision about providing resources to the entity. Okay, this is the objective of a general purpose financial report according to the conceptual framework. Now, an exam focus point is this. The exam will not ask you to state the objective of a general purpose financial report. That's not how they will ask you. They will not ask you that. But you see, from this objective stated, in fact, they will state it to you and they will now ask you questions from it. So let's look at the possible questions they can ask. So looking at this, they said the objective is to what? Provide financial information. So majorly. So what they can ask you in the exam is, what is this financial information? They have asked it before that you should state the financial, they will state the objective and ask you to state the financial information. And we are providing financial information about whom? A reporting entity that is useful to potential and existing investors, lenders, and other creditors. Okay, see, they listed three sets of people that these are the people who provide financial information to. They have asked you before in your exam to list these people. They have asked you that according to the conceptual framework, who are the primary users of financial reports? So you need to know these people specifically. We will get there. Then these people, this set of users, they want to use it to what? Make decision about providing resources to the entity. They have asked you before that what are the decision the primary users will use the financial information to make. So those are the questions they can ask. So let's start from the first part, which is the financial information. So this objective, you can know it is okay because it actually flows, right? From providing information, the people we are providing it to, and what they want to use it for. Abi? That's how it flows. So the first part is financial information. So the objective of a financial report is to provide financial information. And I want to believe or guess or assume that you all know what a financial information is, or the financial information we provide to users. Who can tell me the financial information that we provide to users? What do you say? No, let the world hear you. What did you say? Who wants to try? What are the financial information we provide to users? The what?
Statement of your company.
The financial statement of your company. Okay, which was similar to what she said. Any other trial? What do you say?
Statement of profit or loss of the company.
Statement of profit or loss of the company. The cash flow. Say it. Statement of changes in equity. Is that what you said? Okay, she doesn't like to speak loud. Yeah, tell me, what did you say? Okay, change in economic resources. What does that even mean? Okay, yeah, not bad. Okay, I think you have all given it a trial, right? So what most of you said is financial statements, right? That's what most of you said. Somebody says cash flow and all of that. Okay, yeah, it makes sense. It makes sense, right? But just that she said changes in economic resources, right? So she will have gotten a point from that. Those of you that said financial statement, you'll have been wrong for this exam, right? It looks as if you're correct, but financial statement is financial report itself, right? So they are not saying what's the objective of that financial statement. They said it's to provide financial information. So what they want is that what is that information? The assets and the liabilities, the income and expenses, and not just all of that. That's what they want. Okay, but since you are in class, you need to be able to tell the examiner these three the way I'm going to give you now. The first is the economic resources. Economic resources. And what's economic resources? Assets. The second is claims against those resources. Claims against those resources. And that's liabilities. And the third one is what? The changes in economic resources and what? And claims. The changes in economic resources and claims. And what's that? Sorry? Yeah, income and expenses. Fantastic. Income and expenses. See, if they ask you for 4 points, you don't have to start writing stories and all of that. The economic resources is defined as list and explain financial information provided to primary users. One, economic resources. These are assets of the company. Two, claims against those resources. These are liabilities of the company. Third, changes in economic resources and what? Claims. These are income and expenses. Financial reporting doesn't require writing so much stories. No. Sorry?
Economic resources or the claim against the resources. But you remember asset, liability, and income. Will you still be given any mark?
Yes, you will be given marks. You will be given. But it now depends on the examiner now because for you, your answers are scripted. It's when you get to corporate reporting that the way they mark your exam is different. That is when we want your opinion. Here at financial reporting, we don't want your opinion. It's purely principle. So depending on the examiner, if it's me, I might give you. Some people will not give you. Okay? Because since they have made reference to the conceptual framework, right? I think you just have to try and remember economic resources, claims against those resources, and changes in economic resources and claims. That one you are safe. Okay, but if you write asset, liabilities, income, and expenses, some might give you. If it's me, I will give you because it's correct. Some might not. So I don't want you to gamble. Just give it to them as it's well. Okay, so that's the first one. Now, the second one is he said information about a reporting entity that is useful to potential and existing investors, lenders, and other creditors. So these are now the primary users of financial reports. They have asked it before that you should list the primary users. These three. If you mention anyone outside of these three, you are wrong. Except if they say, if they didn't make reference to the conceptual framework. If they make reference to the conceptual framework, right, is these three. And perhaps since the conceptual framework is the foundation of reporting, so even with or without the conceptual framework, anytime we are preparing financial reports, we know that we are preparing it to this set of people: potential and existing investors, lenders, and other creditors. So if you are mentioning stuff like the government, the tax authority, certain regulatory bodies, international communities, and all of that, you would be wrong. You would be wrong. You have to know that it's the potential and existing investors, lenders, and other creditors. And you know who an investor is. An investor is like a shareholder, somebody that gives you money and say that you don't have to pay me back. I want to be part of your progress. They invest in your company for the long term. Let's succeed together. And you know who a lender is? A lender is somebody that says, okay, I can't give you this money forever. I will give you to do whatever you want to do, but you have to return it within 1 year or within 6 months, and you have to pay me interest per month. That's a lender. So it gives you loan. A creditor is somebody that gives you trade credit, sells to you on credit, gives you goods, and say when you sell it, you can pay me. That's a creditor. Okay, so now they are now seeing this set of people as a primary user. They are taking them as priority in terms of reporting, whom we are giving our report to. But the question that comes to mind is why? Is it that the other stakeholders, like the tax authority, like other regulatory bodies, like the government, and all these other people, don't they are they not that important that we have to kind of exclude them now? Why is it that is these people that we now see as the primary users of financial statements? Why this set of people? Who knows that? Why this set of people? There's somebody that's always smiling in this class, and that person will talk in our class today. That person will talk in our class today to the world. We like your smiling face. So why is these people, why do we take them as the primary users? Why?
No idea.
No idea. Your friend, right? You're a guy.
Eh? Which people?
These three set of people,
The
the investors, the lenders, and other creditors. Why are they the primary user?
um okay, because they relate directly to the business.
Okay.
And so um kind of
Okay. Not a bad idea. Who wants to give it a shot? Okay, please do.
For a business to run, you need money.
Hmm.
Without that money, the business cannot start.
Well, sure.
And these people are the basic money provider
Hmm.
to start up.
Can I please clap for this guy? Fantastic. Fantastic. And